Well, hello and welcome to Money Control live stream. We are here to talk much about FMCG companies out there. Marico in specific today. It's up by 8% after reporting solid set of numbers, but we are here to slice and dice most of the FMCG companies which have reported their number. Hi there, I'm Nikki Minchandani and I'm being joined by Mangalam Malu from CNBC TV 18 out there. What stood out for you in this quarter?
A bunch of things that stood out for me in this quarter. From the large cap end of things, three numbers that really stood out. Nestle beat estimates on all fronts. A decade high revenue growth that the company posted in a quarter,
Right.
21%. So no mean feat out there. The second number that really stood out for me was Tata Consumer.
Yeah.
Again, doing extremely well, firing on all fronts. At the same time, their Narishco business that really stood out for me. 180 crores is what they did. This is above street expectations and the company's own guidance of 150 crores as well. And their foods portfolio continuing to do well. The third large cap that did extremely well was Britannia. The reason why I like it is gross margins at a much higher level than street expectations in terms of expansion, and it's at a record high level. The second thing that stood out for Britannia this time around, notwithstanding the just mild miss on volumes, was their non-biscuit portfolio doing extremely well. In fact, a couple of their brands like Winking Cow Milkshake is now almost 100 crores, 150 crores. The croissants business is about 100 odd crores as well. So they've been talking about these adjacencies firing well for them. So Britannia in that sense stood out for me. So three large numbers that stood out this season. What could have done slightly better was HUL.
And
What was
Dabur.
definitely a miss was Dabur, because the margins fell, compressed much more than the company's own guidance and much more than street expectations. And they didn't have much in terms of guidance to offer solace as well. From the mid cap and the second rung of FMCG standpoint, Marico. The numbers were in line with street expectations because the company had prepared the street for those expectations itself
Right.
in their fourth quarter update. But the commentary offered so much confidence going forward. Here's a company that tells you that our revenue and volumes will improve, our margins will improve by 200 to 250 basis points, and at the same time, our that's the gross margins.
Right.
We will plow back some amounts into ad spends, and then our operating margins will improve by about 100 basis points. All of this while their growth drivers, which is their premium personal care, which is their foods business, which is their digital brand, will continue to increase in contribution. In fact, soon you'll hear from the management, and my sense is that they will talk about profitability of these growth drivers as well. So with all these things, Marico definitely stood out. The other couple of stars in the pack were these relatively lesser known or relatively lesser spoken of names, Bajaj Consumer and Jyothy Labs. Jyothy Labs over 600 basis points improvement in their gross margins, and this at a time when HUL, which is in a similar business, in a big leader, has not shown as much an improvement in their gross margins. So Jyothy Labs for the last 4 quarters has been doing extremely well and continues to do well under the new leadership. The second one is Bajaj Consumer. Again, here too we had new leadership coming in. Jaideep Nandi joined a couple of years ago from Asian Paints. They've been on this turnaround path, and their new business is doing extremely well too. So they showed good traction.
So overall, just to give a roundup of how the companies have done, and just for the benefit of our viewers, Marico better than expected revenue and margin, Britannia
So
exceptional.
let's do it this way. I'm sorry. We'll talk about large caps and mid caps.
Sure.
We'll talk about stars and we'll talk about laggards. All right.
Okay.
Stars in the large caps: Nestle, Tata Consumer, Britannia. Stars in the mid cap: we have
Marico.
Marico, Jyothy Labs, and Bajaj Consumer.
Sure.
Laggards in this large cap space:
HUL and Dabur.
HUL. No, HUL is not a laggard. HUL is in the middle. It could have done just slightly better.
The
There
volume
a
growth
minus.
was a little
4%,
disappointing.
Yeah, 4% versus 4 to 5%, right? HUL is still a giant behemoth. You never bet against HUL. That's rule number one
Okay,
in
all
FMCG.
right.
So HUL, you at best do not take a trade. You never short HUL, and if you are holding HUL, you never sell that. It's a family jewel.
All right.
Dabur was a bit of a miss. Let's see whether it turns around or not. And so far no other big misses that have come, glaring misses. We do have a couple of other nifty companies remaining to report. We have Asian Paints, we have ITC.
Sure. I mean, if I was just supposed to bifurcate on parameter basis, sure, you've put down the numbers of how the growth trajectory has been on the large cap for the mid cap players, but just on the parameters like margin profile, in terms of the volume growth, in terms of overall the commentary per se, how has it been? Has the growth mainly essentially come in from the volumes, or are we looking at the benign cost inflationary pressures which have essentially percolated down on the margin profile of these players?
So two ways to look at it. Again, volumes have increased, of course, so return of volume growth has happened, but have volumes returned to pre-COVID, pre-inflation levels? No.
Sure.
Will they increase to pre-inflation, pre-COVID levels? Perhaps yes.
Sure.
All of that depends on the monsoons. But has there been gradual recovery in the demand sentiment? Most definitely. That is visible from commentary across the board. What happens to the margins now? Raw material inflation, have we seen the worst of that? Yes, we have. Everything looks like it will improve, barring a couple of products like, flour and dairy products, which are still on a bit of an inflationary, sticky cost kind of profile. But will companies pass on the entire price reductions to the consumers? Perhaps not. They will pass on some to spur demand, and they will save some to increase their spends on marketing. So what this means is that despite a decline in raw material inflation, we might not see a significant improvement in margins for companies. That's at a broader level.
Right.
But granular speaking, a lot of companies will see benefit a lot more. Britannia, case in point, they will save a large part of their costs in raw materials, and they will, increase market share. They will increase their ad spends,
right.
and the cost saving spree that they are on, even if they improve their margins